Welcome back to Explain the Charts. Today, we're focusing on NZDUSD, the New Zealand dollar against the US dollar, and we'll be dissecting the latest news and chart patterns to see what we can learn. Starting with the daily chart, we see a lot of volatility over the past few months, with NZDUSD finding support around the 0.5800 level. The pair has been consolidating above this level for a few weeks, but it appears to be forming a potential bearish pennant pattern. Looking closer, we can see that the price action is approaching the pennant's neckline, which is a crucial level to watch. If the price breaks below this neckline, it could confirm the bearish pattern and potentially signal a move lower towards the 0.5700 or even the 0.5600 levels. However, it's important to note that this is just a potential bearish scenario, and we should look for confirmation before jumping to conclusions. A break above the pennant's resistance level, around 0.6200, would invalidate the pattern and suggest a bullish continuation. Let's delve deeper into the news and economic data to understand the potential drivers of NZDUSD's price movement. Recent news headlines suggest that the RBNZ, the Reserve Bank of New Zealand, may be considering a rate cut in late October. This could further weaken the New Zealand dollar, as investors anticipate a less supportive environment for the Kiwi. Also, keep in mind the strength of the US dollar. The US dollar has been rallying in recent sessions, supported by positive US economic data and the Federal Reserve's outlook. This rally has been pressuring NZDUSD downwards, as the Kiwi dollar has struggled to keep pace with the greenback. Now, let's switch to the 1-hour chart to get a closer look at the recent price action. Here, we see a clear descending trendline resistance, which has been capping the price for the past few days. This trendline is acting as a significant barrier for NZDUSD's upward movement. The latest price action has pushed against this trendline and has created a potential double top pattern. A break below the neckline of this pattern could signal a short-term reversal and a continuation of the downward trend. The price could then potentially target the 0.6000 level. However, if the price breaks above the trendline resistance and the neckline of the double top, it could suggest a short-term bullish reversal and a move higher towards the 0.6150 level. Let's move to the 15-minute chart to observe the very short-term momentum. Here, we can see that the price is bouncing between support and resistance levels, suggesting indecision. This indicates that traders are cautious and are waiting for clear signals before making any significant moves. We can see that the price has been consolidating between the 0.6050 and 0.6100 levels for the past few hours. This range is a key area to watch, as a break above or below these levels could signal the direction of the short-term trend. It's important to be mindful of key events on the economic calendar. The release of the New Zealand trade balance later this week could have a significant impact on NZDUSD's price movement. Positive trade balance data could boost the Kiwi dollar, while weak data could push it lower. In conclusion, NZDUSD is currently facing headwinds from a potential RBNZ rate cut and the strengthening US dollar. The daily chart suggests a potential bearish pennant pattern, which could lead to a move lower towards the 0.5700 or 0.5600 levels. The 1-hour chart reveals a descending trendline resistance and a potential double top pattern, which could signal a short-term reversal and a continuation of the downward trend, targeting the 0.6000 level. However, a break above the trendline resistance and the neckline of the double top could indicate a short-term bullish reversal and a move higher towards the 0.6150 level. The 15-minute chart shows consolidation between the 0.6050 and 0.6100 levels, indicating indecision and caution among traders. A break above or below this range could provide a clear signal about the short-term direction. Overall, NZDUSD is at a critical juncture and traders should remain vigilant. The potential RBNZ rate cut, the US dollar's strength, and key economic data releases could all influence the pair's trajectory. The 0.5700, 0.5600, 0.6000, and 0.6150 levels are important to watch, as they could serve as support or resistance levels for the pair. It's essential to remember that this is just an in-depth analysis of the current market conditions and not financial advice. The market can move quickly and things can change rapidly, so always do your own research and consult a financial advisor before making any trading decisions.